Good morning, ladies and gentlemen. Welcome to the IRB InvIT call hosted by the company for discussing the financial results for the quarter ended June 2025. We have with us on the call today Mr. Anil Yadav, Mr. Rishabh Gandhi, and Ms. Swapna Vengulkar from IRB InvIT team. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Rishabh to give an overview of the significant development during the quarter. Over to you, sir.
Thank you. Good morning to all. I would like to welcome all the investors and the analysts on the call. Hope you have reviewed our detailed number as well as the presentation. Coming to the toll revenue performance, during the quarter, we have witnessed a year-on-year toll revenue growth of approximately 8% across the portfolio, despite a relatively softer June month due to the early onset of the monsoon. This performance was primarily driven by strong growth in key projects, with Tumkur-Chittorgarh project recording a 14% increase and Jaipur-Deoli project reporting 8% growth. On the tariff revision, for the current financial year, we have received tariff revision of approximately 3.5% across 4 of our projects, that is Talegaon Amravati project, Tumkur-Chittorgarh project, Jaipur-Deoli and Amritsar-Pathangarh project. These revisions are in line with the annual WPI link adjustment mechanism and support stable cash flow generation. Now coming to the distribution part. For the quarter ended June 30, 2025, the trust has declared a distribution of 2 rupees per unit, consistent with previous trends. This distribution comprises of 1.57 per unit as interest, 0.28 per unit as dividend, which will be exempt in the hands of unit holders, 0.15 per unit as return of capital. Since the IPO in 2018, the trust has cumulatively distributed 4,432 crores, which is rupees 76.35 per unit, equivalent to approximately 75% of the total capital raised. Now the update on the acquisition part. As of June 30, 2025, the net debt to value of the trust stood at a healthy 0.3:1, indicating significant headroom for leveraging and new acquisitions. The Board of Directors of the Investment Manager has approved the binding term sheet to acquire 3 revenue-generating road assets from IRB Infrastructure Trust, Private InvIT. The 3 projects are IRB Hapur Moradabad Tollway Limited, Kaithal Tollway Limited, and Kishangarh Gulapura Tollway Limited. Under the approved structure, the trust will acquire 100% of equity interest in the target SPVs in 1 or more tranches and also provide shareholders loan to facilitate the repayment of existing sub-debt unsecured loan from Private InvIT. The agreed equity value for the transaction is rupees 4,905 crores with a minimum implied enterprise value of rupees 8,436 crores. This acquisition is subject to regulatory and third-party approvals as well as other conditions precedent. The unit holders have overwhelmingly supported the transaction with 96% voting in favor of the resolutions related to the asset acquisition and allied matters. Coming to the rationale for this particular acquisition, with the concession for the MVR asset ending in financial year 26-27 and its FY25 contribution to NDCF standing at approximately 110 crores or 16% of the total cash flow generation, the proposed acquisitions will enable a seamless transition. This move will help maintain operational continuity, extend the weighted average life of the trust portfolio, and reduce the impact of revenue concentration risk. Further, today's con call is focused exclusively on the financial and operational performance for the first quarter of FY26. In line with the legal and regulatory guidance, we will not be discussing any forward-looking statements, including potential fundraising activity or projections related to future performance. We request all participants to kindly restrict their questions accordingly. Now coming to the financial performance. The total consolidated income for the quarter ended June 2025 stood at rupees 292 crores as compared to rupees 275 crores for the corresponding quarter of previous year. The total toll revenue for the current quarter increased to rupees 254 crores as against 236 crores for the corresponding quarter of previous year. EBITDA for the current quarter stood at rupees 246 crores as against 228 crores for the corresponding quarter of previous year. Interest cost, which includes interest on premium deferment for the current quarter, stood at rupees 72 crores as against 76 crores for the corresponding quarter of previous year. Depreciation, including amortization for the current quarter, stood at rupees 71 crores as against 63 crores for the corresponding quarter of previous year. Profit after tax for the current quarter stood at rupees 100 crores as against 86 crores for the corresponding quarter of previous year. Now, I will request the moderator to open the session for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Param Vora from Trinetra Asset Managers. Please go ahead.
Hello, good morning. The one question which I wanted to ask was regarding the dividend yield. So could the management elaborate on the sustainability of the distribution, particularly in light of, fluctuating profits and past high dividend payout percentages, for example, 1,500% in March 22, and then it followed by 0% in recent years. So can you give, a roadmap regarding the dividend yield?
So I think in the past also we have highlighted that dividend as per Companies Act, we can pay a dividend based on the profit as per Companies Act. Now the MVR, as Rishabh has already highlighted, that MVR is towards the fag end of their concession. There is a book profit as per Companies Act, and whatever there is a book profit, to that extent we are paying the dividend. And I think the unit holder has to look at the total distribution in the totality. And for product like InvIT, where the yield matters the most, the form of distribution definitely, as far as taxation is concerned, taxations are governed by the form of distribution. But its unit holder should be more concerned on the total distribution than on the form of the distribution. And whenever there will be a book profit in the companies, to that extent we can pay dividend. This is based on the Companies Act regulation.
Just to add, the current dividend could be exempt in the hands of unit holder since this MVR SPV is following the old tax regime.
Okay, so you cannot, give any percentage or, exact number.
Yes, it's difficult to project that what will be the dividend in the future.
Okay, understood. Thank you.
Thank you.
Thank you. The next question is from the line of Satinder Singh from Infotech Limited. Please go ahead.
Yeah, thanks and congratulations Team IRB for getting the unit holder consent for the acquisitions. So I wanted to understand now what are the next steps in the acquisition process and indicative timelines for completion of the same now that you have the unit holder consent.
I think, Satinder ji, as we have discussed, the process involves certain approvals, that is bank's approval, NHI approval, which is already in process. And once the approvals are in place, then definitely we will be going ahead with the transaction. And I think based on our interaction and in terms of follow what is going on, probably by this month end or first week of August, we should be able to get the approval. This is the timeline what we are basically have a clarity. But these are the two key approvals which is pending in terms of IRB InvIT fund is concerned.
Right, sir. And so this reduction of 50 bips in the repo rate recently, I presume would have led to increased investor interest in terms of the new units that we have to offer. Okay, so any color you could give on that?
Satinder ji, I think if you look at the reduction in the repo rate, or even there is a reduction in the MCLR rate of the bank, definitely those are positive for the InvIT. And as we have discussed in the past also, that considering we are acquiring the asset also, and the total debt, what is based on the information in the public domain, the total debt will be around 7,500 to 8,000 crores. And as you have highlighted, that half basis point kind of reduction can lead almost 40 crores kind of impact on the interest cost. So I think this is the kind of impact. I think in terms of the investors' appetite, definitely if the interest rate is going down, that, as you rightly highlighted, that can definitely increase the interest in terms of the investor, and their threshold IRR requirement should also come down. This is the general perception. Since the discussion and active discussion with the investors are on, and we can provide more color once we move ahead with the transaction.
Right, sir. And you said the approvals are expected maybe by this month end or beginning August. So in terms of consummation of the transaction, getting investors on board, so is it fair to assume that maybe by August end all of this should be in, or latest by the end of this current quarter? Is that a reasonable assumption?
Yeah, we expect to conclude this transaction soon. And since there are certain approvals where the InvIT do not have direct control on those activities, that is the estimated timeline which we have shared with you. On that basis, it looks likely that we may be able to conclude the transaction as timeline mentioned by you.
Right, sir. Okay, just one question on the interest rates. I have a few more. I'll come back later in the queue. On interest rates, so Rishabh, what is the current interest rate? How much of this 100 bits reduction has already flown into our current rate? And assuming if there are no reductions hereafter, what is the kind of exit rate of interest we are looking at as of 31st March 26, exit rate for this year?
So currently, in the current month itself, the MCLR rate was reduced by 20 bps, and we expect some reduction in future period also on the MCLR bit, and we also requested the bank for reduction of rate. So we'll just get clarity on that in the coming quarter.
So I think, Satinder, to put the things in right prospect, I think if you look at last three times the RBI has reduced the rate, but transformation, those reduction in MCLR has took some time, and I think the first reduction in MCLR we have seen very recently. But just to share with you, historically the InvIT was paying around 7.25% interest rate. Historically, that was the lowest rate. And as of now, if you look at the rate is around 8.8 to 8.9%. And I think whatever indications and whatever the rate is prevailing, I think triple A comps are trading today around 7.5 to 7.55%. So if one wants to basically convert the entire debt on the fixed rate, so that is the typical rate which is prevailing in the market, and that is the one option available with the InvIT also. But we believe that there may be further reduction in the interest rate. We may not be converting the entire debt in the fixed rate. I think around 25 to 30% debt we will be shifting to the fixed rate, and around 65 to 70% debt will be on the floating basis. This is the thought process on which we will be moving ahead.
And any prepayment costs linked to this, okay, in case we look at that shift? Because I think that'll be a great idea, but any prepayment costs that we'll have to kind of pay out?
There won't be any repayment cost if we are shifting somewhere near the reset date, which is on quarterly basis.
So, Satinder, in the loan agreement, there is a clause that on the reset date, if you want to prepay the entire debt with a relevant notice period, you can use the notice that rate is not acceptable, and you can entirely prepay the entire debt without any prepayment charges. And this is the terms in our loan document. And as Rishabh has highlighted that reset date is on every quarterly basis. So we have right to pay the existing debt in every quarter if we want to raise the debt through other sources.
Right. That's very clear. I think that's a great idea. I've got a few more questions. I'll come back in between. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Siddesh Chaudhary from Maximal Capital. Please go ahead.
Sir, on the acquisition part, so how are you planning the fundraising? Will the promoters also step in with the capital which will be required for the same? Have they indicated anything?
Yeah. So I think whatever indication we have got as an InvIT, promoter has also said that they are also evaluating, apart from the other investor also evaluating those. And once we get a firm confirmation, we'll be sharing this detail with the unit holder.
Okay. And what has been the valuation metrics in terms of the project IRR and EV to EBITDA at which the three acquisition have been done?
So I think in terms of the valuation, as per the InvIT regulations, the valuation is done by the independent consultant. In any way, these assets were part of the private InvIT where the valuer is already KPMG. So I think valuation is determined on the basis of the independent consultant, and thereafter applying a certain percentage of the discount to the independent valuation report.
Our net debt will not exceed 49% after this acquisition.
Will not exceed 49%.
Yeah, that's right.
Okay. But overall, sir, I mean, since we have a sense of the cash flow, so will we be able to maintain this or increase the distribution per unit of 8 rupees post-acquisition?
Sir, as in the beginning of the call, Rishabh has highlighted that we will not be able to comment anything on the futuristic statement. In fact, on the transaction side also, that is the best effort on which we are trying to conclude the transaction. Once the transaction is concluded, we will be able to share the nuances, because the payout and other thing will be also dependent on the at what price we are going to issue the units. So considering there are too many variables, I think this will not be a right forum or even the right time to guide in terms of the future distribution. once we conclude the transaction, definitely we will be transparently sharing with the unit holder that based on the valuation report, based on the projections which is in the public domain, what will be the payout per unit it will be translating. And anyway, in FY27, one of the assets, that is MBR, is going out. I think today, as Rishabh has highlighted, it's contributing almost 18% of the distribution. So that will be going in FY27. Anyway, there will be a reset in FY27 once MBR goes off the table. But I think considering all these facts and the acquisition, we will be sharing with the unit holder what kind of distribution is expected once the capital is raised.
Understood, sir. And sir, one question on the NAV. So earlier when we used to do our NAV calculations for the entire InvIT, we used to assume around 4-5% each of inflation as well as the toll, the vehicle volume increase. But what we have been seeing that A, inflation is coming down, and B, the overall revenue increase that we are getting from the toll is in the vicinity of 6-7% rather than 9-10%. So, would we need to revise our NAV in the upcoming calculations in the September quarter, sir, owing to the recent trends and the inflation number?
So I think in terms of the NAV, if I will just go by the way the valuer and traffic consultants project the toll revenue for the future, every period which is gone by, and if the base itself has got corrected, or basically there is not a sufficient growth, automatically they will revise the base. And thereafter, whatever the growth is actually achievable, on that basis they project the future number. But just to highlight that, as you have highlighted that the inflation is coming down, so I think inflation also acts as one of the benefits. If I can share with you, inflation in terms of the rate revision is the 30% fixed plus 40% of the WPI. Even if the WPI remains at a zero, I will be getting at least 3% rate revision on the 1st April every year. And in terms of the interest cost, if the similar kind of 100 basis point of benefit I will get on the interest cost, so I think the saving in the interest cost will be at least 2x of what we will be losing on the revenue side. So I think it's this WPI acts as hedging for the lower realization on account of lower tariff revision due to lower WPI. So I think they balances each other very well. So I think there is nothing to lose for the unit holder considering the maths what we have seen in the past as well.
When I use the formula, can you please tell us again what was the fixed component is 3% plus 40% of WPI?
Yeah, so rate revision happens, the formula for rate revision is 3% fixed and plus 40% of the WPI. If WPI is zero, then also I will be getting 3%. Even the WPI remains at 2 or 3%, then it will be a 3% plus 40% of 2%. So it translates around 3.8%. Then your impact on the revenue will be 100 to 120 basis points. But even if you get 100 basis point benefit on the interest side, your entire debt is around 2,500 crores. 100 basis point saving in the interest cost will result around 25 crores of saving, and 120 basis point reduction in the tariff growth will result around 10 to 12 crores of impact on the revenue. So on the saving will be almost double than whatever we will be losing on the revenue side.
Yes. And just like some assets like Tumkur, etc. have shown good growth, while others, let's say Pathankot and some others have gone for a flattish revenue or something like that. So given this formula, let's say, we would have got 4% odd rate revision, so the vehicle movement would have reduced. So normally when we see reduced vehicle movement in some of the assets, is it normally because of a road which has come up which is probably better for commuters compared to the road that we are operating? Or does it normally indicate sluggishness? It's more like a general question which I wanted to understand why vehicle movement might be lower in some of the assets.
I think there are specific reason, project-specific reason, and I think having a portfolio of the asset makes sense. So then on a portfolio basis, if you are getting around 9 to 10% kind of growth, I think then that basically hedges on the certain asset which will perform better than expectations. There will be a certain asset which will be basically having some impact. Just to highlight, since you have highlighted the Amritsar-Pathankot, due to geopolitical tension, the growth in the project was not as we have projected. The growth was lower due to the geopolitical tension during the last quarter. We have not seen any kind of reduction in terms of revenue, but growth has remained muted.
Okay. No, sir, my question was mainly from the point of NHAI. So when they give these BOT toll roads, they are giving a lot of risk to the developer. Ultimately, we are taking out the risk, right? We are bearing the risk. So do they also prevent somehow that, a competitive road should not come up for some time in general, maybe not as per the law, but in general practices that they prevent the risk by not taking out another road between the same region? Does it normally happen or not?
I think that is very good question. I think you are talking about the safeguard which is available in the concession agreement, or even if the safeguard is not there, whether those are practiced in the reality or not. So I think we can only talk whatever the safeguards are available in the concession agreement. In the concession agreement, this force majeure kind of event is covered in the concession agreement. There is political force majeure. If because of that political force majeure, if the revenue is impacted, and then you will be getting 100% of interest in O&M and plus equivalent extension in the concession period. If it is not direct political, if it is indirect political event, you will get 50% of interest in O&M and 100% extension in the concession period. There is indirect political event scenario like pandemic, etc. So those were like a COVID cases where we got extension in the concession period. Now coming to your specific question with respect to the parallel facility, there is a provision in the concession agreement that NHAI will not be constructing any kind of parallel facility. And now there can be question, if NHAI is not constructing, whether state can construct the parallel facility. Typically, I think it's a standard mechanism that NHAI also signs the state support agreement for all the states. Considering the state support agreement is there, so then there will not be any direct facility which will be coming in. I think there is specified period is there in the concession agreement. And even after that specified period, if there are some facilities coming, the toll charges for that facility will be at least 1.3x as compared to the toll road on this highway. I think there is enough safeguard provided in the concession agreement for all the events. So it's not that all the risk is transferred to the concessionaire. There is a further provision in the concession agreement on the target date. If your traffic is not up to the mark, you can get extension in the concession period. And extension also works like an automated formula. for every 1% shortfall in the revenue, you will get 1.5% extension in the concession period. And it works as a floor and cap model. There can be a reduction also in the concession agreement, since you are able to realize the revenue faster. So, considering that if every 1% increase in the revenue will have only 0.75% reduction in the concession period. So, I think on protection side, the concession period can extend it by 20%. If it is concession period has to reduce, it will be reduced maximum by 10%. So I think the concession agreement, the way it's drafted, it's a protect to the interest of the investor, whether those are the lenders or those are the owner of the concession agreement.
Understood, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants, please limit your questions to 2 per participant. The next question is from the line of Saurabh Chatre, an individual investor. Please go ahead.
Hi. Am I audible?
Yes, you are audible. Go ahead.
Yeah. Hi. Okay, but a couple of questions regarding debt. So have our debt completely completely sort of repriced to new interest rate scenario, or it will take one more quarter?
It will take 1 quarter because the given debt is still at SPV level.
Are going to save money on that. So what is the thought process? Will it be distributed as part of DPU, or will it be retained at a trust level for acquisitions?
I think regulation is very clear that you are 90% minimum you have to distribute. The management has very limited rights in terms of the retention. Anyway, we have to distribute minimum 90%. And typically, if you look at the history of the public InvIT, we have tried to pay at least 94 to 97% to the unit holder. And considering that few quarters, because second quarter is typically monsoon affected, so in first quarter we try to retain something so that the distribution can be even out for the second quarter, which will be impacted from the monsoon. Apart from that, we always try to distribute the maximum to the unit holder. Whatever the benefits trust is getting, we will try to pass on to the unit holder.
Okay. No, got it. I understand. Let me rephrase the question. I mean, will that move the needle? I mean, the repricing of the debt, will that move the needle in terms of increasing DPU?
Definitely, that will mathematically that will increase the DPU. But as Rishabh has already highlighted, we are adding the asset, and considering that once the addition of the asset happens, and that also we are adding the asset with the increasing the unit capital. So based on increased unit capital, what will be the payout at, and that will be also depending upon what price the units are issued. So once the new units are issued and we have a revised capital base, we can discuss with the unit holder what will be the payout.
Okay, got it. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Dheeraj Dave from Samvat Financial Services. Please go ahead.
Yeah. Can you hear me?
Yes.
Okay. So my one question, or the first question is basically we had discussion in last phone call where most of investors have requested management to consider right issue in case they intend to issue new capital, while the unit holders have approved the new transaction. But if management can give some indication, because the resolution which sought approval, they might not have any mention of right issue. So can management give some confidence? While I understand you need to plan in finance and kind of it, but at least because there was no mention of right issue. In fact, I voted against the resolution because there was no mention of right issue. It was giving complete kind of approval in the hand of management. And now such a critical issue, when almost 4 to 5 investors requested you to please give us right, you may carve out, at least that right is missing kind of, it is not even appearing kind of as a prominent one. So just wanted a management view on that.
Sir, being a unit holder for the public InvIT, I think you have invested from last several years and you are consistently holding the units. And in terms of the rights, I think what feedback we are getting from the most of the unit holders, and we have engaged with in terms of even we have interacted more than 500 plus unit holders, and in fact in terms of the participation also, we have seen a larger participation this time coming from the HNI family offices and the even from voting from the small unit holders also, whether they have voted for the transition or voted against the transition, but it was a large number base of unit holder has voted for the transition. And people have voted for the transaction, and if you want to issue the rights issue, then typically the rights issue will be always a discount to the current market price. This is what we have seen in the past. And if you want to issue the rights at lower to the current market price, then typically if you want to raise the money through preferential or through QIP, then those investors will also seek a similar kind of treatment what is given to the existing unit holder. So we have not yet concluded, and based on since so I think these were the challenges with the management, and we thought it will be more prudent for the existing unit holder to maximize the price at which a unit can be issued. And if we will try to incorporate the rights issue in this, the existing unit holder basically dilution may be higher as compared to what will happen in QIP or preference. And anyway, currently the units are frequently traded, and if existing unit holder wants to add, they can add from the market. But definitely we have not concluded so far anything on that. We can discuss and debate out whether right will be also one of the valid options available for the management in terms of the issuance of the new units.
So the past instance, I would not generally like to give a competitor name, but you have an India Gate transmission line which did invite, which is the second invite listed. So you can time it out. If that is an issue, you can immediately do a right issue, and after a period, you can do whatever QIP or whatever kind of it. That's the one suggestion. Second part, when you are saying that the new investor would have objection, you also need to consider what is our NAV and what price will be. If we are going to issue unit, if you can give us assurance or kind of indication that unit issue would be happening higher than NAV, I am perfectly fine. I don't want right issue. So if you are going to, let us say NAV is 80 rupees, and if we are doing even QIP at 79, actually is a kind of hit in the existing unit holders kind of it. So that why I appreciate what you are saying, you would not get sufficient funds. Probably you, and my suggestion would be you can phase it out. Anyway, you don't require money immediately, or even if it requires immediately, you can put it in 15 days windows or 20 days windows whereby, and I doubt that somebody will say that I want the same treatment as the right issue. I think that is something which is very kind of clear. A new investor, let him come out at a premium to NAV then, if he wants to get a QIP. If QIP are so convenient. Because otherwise you are diluting the existing investors.
Sir, just to highlight, since you have highlighted a case of one other investor, typically what we understand from the lawyer, you may have a better prospect and better understanding of the rights than the management. But just wanted to share that we have internally checked with the lawyers, and typically the rights issue takes around 5 to 6 months time. That is the window for the rights issuance.
So, but we have been discussing this transaction also for 6 months, no?
Sir, let me complete. Sir, let me complete. I will revert on this question as well. So rights issue timelines basically is typically 5 to 6 months. There is a faster process. For faster process, you have to approach to the SEBI, and if SEBI allows, you can try to wrap up the issuance at a faster speed as well. And as you have rightly highlighted that since we are discussing these things from last 3 to 4 months time, but just to share with you that we have received the unit holders approval very recently, and before unit holders approval, I think regulatory also we would not have been able to do a rights issue before the getting the unit holders approval.
Okay. So that's fine, but only humble submission is that please
Mr.
consider that.
Dheeraj,
Yeah.
hello. Could you please
Yeah.
come back in the queue for further questions, please?
I have just asked one question, which was about right, and that was a discussion. I just want one more question and I will complete. So one more thing which I want is that in Tinku Chakradurg, in the presentation on NCDS, we basically find that there has been a 91.57 crore of something like which a legal line, the NCDS. I am referring to the PDF file, page 13, Q1 FY2026 result. So this 91.57, how much is the premium? And I would suggest if you specifically mention that in result.
Sure, sir. So this amount pertains to premium itself, and that in the NDCF, new NDCF formula, that is considered as a capital expenditure.
That's perfectly fine, but at least mention in notes. You have given a major maintenance kind of indication in that distribution. Secondly, when you give 3 months, 6 months, 12 months, and this has been my constant request, please give a comparable period. Why can't you give Q1 of last year? And even if regulation stops you from basically providing minimum, it doesn't stop you from giving maximum. Which investor will like to open last year? In fact, I opened that last year results. I didn't found the distribution detail of Tinku Chakradurg kind of it. So why don't you give us Q1, 6 months, if whatever is the period comparable, at least give last quarter and comparable quarter last year. And this has been my constant request, and I would just suggesting management please take that feedback, and that's from my side, and wish you all the best.
Yes. Just to highlight on page 23 of the corporate presentation, we have given the NDCF which is Q1 FY26 and Q1 of FY26. So there is comparable for FY25 and FY26 as well.
Now, how Tinku Chakradurg, for example, a simple question, you see it's 14% growth in quarter-on-quarter toll revenue. We don't find anything translating into NCDA.
So I think NDCF, sir, Tinku Chakradurg, hope you will.
So that's what I'm saying. Is individual NCDF, please provide quarter-wise. You have that, right?
Fully agree with your point. The only point was the previous year, the first quarter was not reviewed, the NDCF was not reviewed, and from current financial year, we have started as per the SEBI norms and as suggested by the unit holders also, we are providing NDCF for each SPV on quarterly basis. So way forward, the comparative would be available, sir.
Thank you, sir. That was the last question for today's conference call. I now hand the conference over to the management for their closing comments.
Thank you for joining this call. We appreciate your participation. If you have any further questions, please feel free to reach out to us. Thank you.
Thank you. Ladies and gentlemen, this concludes your conference for today. We thank you for your participation and for using ResearchByte conferencing services. You may now please disconnect your line. Thank you. Have a great